All right. Hey, this is Lyle, Hanna, and we're going to jump right into the HR crisis management, COVID-19 updates, seeking clarity in murky times. We're delighted to have so many of you join us today. This is a follow-on to what we did last week. A lot has changed over the past several days. And Jim Morris is on the line. He's a local attorney who is really up to speed on this stuff, and he's going to be sharing some things with us. Allison Petrie is going to be fielding your questions, so we're going to try to take them as we go, and we will get them in, between things as we talk about them. And I'm expecting a good conversation today. Last week we couldn't get to all the questions. We'll try to get to every one of them we can this week, and we'll be following up with quite a bit of information after this call. The agenda today, here's what we're going to cover. First up, we're going to hear from Congressman Andy Barr. He's on the line, and he's going to share some comments about what's going on in Washington and what he's done to get this done and what he sees as the hot spots. We're also going to talk about the new SPHR guidance and updates on that. We're going to talk about the Senate CARES Act and implications of that for all of us, for employers. And then we're going to wrap up talking about the COVID-19 on the state of Kentucky and our unemployment insurance. So with no further delay, let's hear from Andy. Andy, welcome. Glad you're here. Thank you for all your hard work on this. And what do you have to share with us from Washington today? Well, we think he's on there. Let's see.
We might want to come back to.
He says he's getting a busy signal. I thought he was already on, but we'll get somebody to follow up with him, and when he gets in, we'll break to him. That's interesting if the line is so full that he's getting a busy signal. We'll check on that. Let's go on then to the next subject, and we'll get Jim to work on this, and we'll get Andy on the line as soon as we can. You want to change the slide? Okay, well, we're going to move right ahead. The next thing is to pick up on the new SPHR guidance and updates. Jim, you want to give us the latest on that?
My apologies, I got disconnected for a second on phone. So we provided most of this the last time, and so I'm just going to do a very quick follow through so that everybody understands where we are. March 18th, President Trump signed into law the SPHR. We talked about it last time quite a bit. The things that have happened since we spoke was with regard to the Department of Labor providing guidance. If you recall, the last time when we spoke, I indicated that Wednesday was the deadline for some guidance, and so the Department of Labor came out with that guidance along with the IRS and the Department of Treasury. The SPHR also directed the DOL to identify enforcement guidelines on or before March 31st. Those have also come out. There have been 4 different updates, one of which is not in the slide because it happened last night. Then, of course, the last and the most critical for all of the businesses is the effective date, which is April 1st. So on the March 20th update, this was the IRS, Department of Treasury, and DOL collectively. They addressed the employers and it identified an employer as being between 1 and 500. When we spoke last week, we talked about the possibility of a less than 50 exemption. It did not happen with one caveat. Small businesses with less than 50 may be exempt, not are, may be exempt from sick leave requirements related to the school closing or child care unavailability. There is no other relief for small businesses under the FFCRA. The may in this addresses if you can demonstrate that this is a major impact on your business operations, then you have the ability to request that you not be enforced under the 12-week leave. And we're going to go through some of their guidance on calculations here in a minute. There's a 30-day non-enforcement period that was identified on March 20th. It was assumed at the time that that meant April 1st to April 30th. It does not, and we'll get into that clarification in a minute, and it is critical for your understanding of how to handle the implementation. Again, the effective date is April 1st. That's when it becomes law. The thought was actions taken prior to that date are not governed by that law. They came out with clarification that may address that issue and cause some concerns. Paid leave requirements were addressed on the March 24th, and if you notice, that's this is part of the March 24th announcement that they made, along with the wage and hour division. So you must pay 80 hours of paid sick leave at the regular rate of pay, and this again starts on April 1st, where the employee is unable to work because the employee is quarantined and or experiencing symptoms. I will be honest with you, I believe that this was intended because they intended this to only apply to people who were truly sick, who were truly at home. Then they came out with the global quarantine, and the impact of this law is entirely different than what was anticipated at the time, because everyone, unless you are in an essential business, almost everyone is shut down now by governor order, local order, and presidential order. So this 80 hours is much more impactful than what I believe it was intended when they did this a couple of weeks ago. The second provision is 80 hours of paid sick leave at 2/3 for the care of a quarantined individual or for the care of a child. Again, the impact of this at the time of adoption, I think, is different than the actual impact. And again, I think that's because nobody in their wildest dreams at the time that they adopted this, and you know, congressmen can certainly jump in and tell us otherwise, I don't believe anybody ever anticipated a full-blown college, high school, elementary school, and child care shutdown. That shutdown drastically changed the impact of what this law really was intended at the time. Because of this, you have to pay the 2/3. And for all employees who have been employed for more than 30 days, up to 10 additional weeks of paid expanded family medical leave at 2/3 of their salary for those that are caring for anyone with COVID-19, or, and this is the kicker that caught everyone, anyone who has to care for a child whose school has been closed. That's the part that has caught a lot of employers off guard and is creating some real heartache for a lot of people.
Hey, Jim.
So, yes, sir.
Andy is on the call. Can you take a break right there?
I sure can. I'll back up to his.
Okay. Andy, we're glad you made it and appreciate all your work in Washington. You want to give us an update on some things?
Is he muted?
I don't know. He dialed in, so he should be able to speak up about it.
Autumn, do you see him among the participants that you can unmute?
I don't see his name, but there are a few numbers that are dialed in.
He says he's on, but we're not hearing him. So
unmute those 3 numbers. Let's figure out which one he is. Probably the last one that called in.
I'm going to ask you what his number is.
He could call you direct and you could just have him conference in that way.
Yeah. Try that again. Okay, well, for some reason we can't hear you, but now we've got you. So as you speak, the world is listening.
Okay, can you hear me?
Yes, indeed. Can you all hear him?
Pretty well.
Thanks for inviting me. Can everybody hear okay?
Yeah, I believe so.
Yes.
Yes.
Okay, very good. So, yeah, I was able to go back to Washington, drove back to Washington for the vote on the CARES Act, the $2 trillion phase 3 of this, and then drove home on Friday night. So we had a quorum, about more than half of the members were there to participate and vote, so we were able to get that passed. Just listening a little bit to the call, I know you all are very interested in the details, the implementation of the Phase 2 bill, the paid leave bill, and I'm interested to get feedback from you all about any concerns that small employers may be having, particularly with the exemption that we intended to include, and we did include, but I was interested to hear about implementation concerns, because clearly the intent, congressional intent, was to provide a waiver for not a mandatory waiver, but a discretionary waiver for employers with less than 50 employees that had a hardship. So a hardship exemption for the mandatory paid leave provisions for employers less than 50 employees. Also, there is a very specific effort was made to compensate employers dollar for dollar for the mandatory paid leave. And yes, there is a additional burden that's placed on employers here as a result of the closure of schools. And so some parents are having to stay home from work and invoke that paid leave for family purposes. As I recall, the way we drafted that, though, there had to be, in order to trigger that, and correct me if I'm wrong, but in order to trigger that, you could not have any alternative child care. So if there's a stay-at-home parent, if there is other child care available to the worker, that would not then trigger the mandatory leave for the worker unless there's no other alternative for child care. So anyway, those are just a few comments on the second bill that I'd love to see if I can answer any questions on that. And if I can't answer them right now, we can track it down and see if we can find the answers. But that was clearly the intent of Congress. Those things were the intent of Congress. And the compensation for the employer was also designed so that if the employer has a cash flow problem or you don't have enough cash parked at the IRS from the standpoint of estimated payments, that you could get a Treasury advance. And we'd be happy to work with any employer in the 6th District to facilitate that cash advance from Treasury to account for that. But beyond that, maybe what I thought, Lyle, I would do is just briefly describe the Paycheck Protection Program and loan forgiveness part of the CARES Act, which is, I think, what many employers are interested in. This is part of the Phase 3 federal response. And the goal here, of course, several of these bills, the second phase bill and then the CARES Act, both have expanded unemployment benefits included in here. But the goal here is to prevent layoffs. I know there's been a significant spike in unemployment claims last week, 3.3 million additional unemployment claims. There'll be more this week. But the goal of this Paycheck Protection Program and the Small Business Administration component of this is to prevent layoffs and to keep workers attached to employers and do so in a way that's affordable for the employers, and to prevent as much business interruption as possible. Again, as I think I said on the call last week, the way to think of this situation is not a recession in the traditional sense. This is not a recession in the traditional sense of that phrase. This is a intentional, voluntary shutdown of the economy by the government. And that's why we had such a need for a rapid response from Congress to compensate the private sector for this mandatory intentional shutdown of the economy. Let me just describe really quickly the Paycheck Protection Program and loan forgiveness feature of the bill. There's a lot more to the bill, but this is $350 billion and probably of most intense interest to the folks on this call. The way this works is that there's a new loan product within the Small Business Administration 7A loan program. It's 100% guaranteed by the Small Business Administration. It has an interest rate of 4%, automatic deferral of principal, interest, and fees for 6 months on these loans. The maximum loan that you can get on this program is $10 million or 2.5 times the average monthly payroll based on prior year's payroll, whichever is less. So again, the maximum loan amount is the lesser of $10 million or 2.5 times, 2.5 times the average monthly payroll based on prior year's payroll. The new loan will cover payroll costs, including costs related to continuation of group health care benefits during periods of paid sick, medical, or family leave. So all of the so both from the second phase bill, the family coronavirus response bill, you have a dollar for dollar reimbursement on payroll tax credit, but you also can use this loan to compensate paid sick, medical, or family leave. Also, insurance premiums are covered. Employee salaries, commissions, or similar compensation is covered. Payment of interest on any mortgage obligation is part of this. And rent, including rent under a lease agreement, utilities, and interest on any other debt obligations that were incurred before February 15th. So that's what the proceeds of the loan can be used for. Businesses and 501c3s with less than 500 employees are eligible for the new loan. Some employers with greater than an aggregate of 500 employees will also be eligible, especially a parent of say multiple franchisees of a restaurant chain. That would be an example of where you could see the parent company multiple different physical locations of a store be eligible for this loan as well, even though the aggregate number of employees exceeds 500. Also, sole proprietors, independent contractors, and self-employed individuals are eligible. And again, businesses in hospitality and food industry with more than one location can be eligible if the store and location level of the store employs less than 500 workers. Very important point. This loan program will not be administered by the SBA itself. We recognized the need to expedite the processing of these loans, originating these loans, especially at the beginning of April when payroll, rents, other bills are due. And so to increase the speed and turnaround time of the new loan product, all lenders have delegated authority, and we've expanded the number of lenders that are able to originate these loans. It's no longer just the SBA approved banks. It's all FDIC insured financial institutions and credit unions and non-bank lenders who are approved and brought into this program by the Treasury Department. And the Treasury Department will be bringing in many of those non-bank lenders this week. So financial technology firms, other non-bank lenders will be also able to originate these loans. All borrower and lender fees for these loans will be waived, and collateral requirements and all requirements for personal guarantees are also waived under this Paycheck Protection Loan Program.
Wow.
And then the final point, and so that's all of that is designed to really expedite through your bank this week the ability to push out this liquidity. And then the final point is the loan forgiveness feature of this. Businesses that maintain payroll continuity from February 15th, 2020 through June the 30th, 2020, as defined by headcount, can request forgiveness on the portion of the loan that's used for payroll costs, mortgage interest, rent, and utility pay over an 8-week period. So the forgivable portion of the loan is 8 weeks of payroll costs, mortgage interest, rent, and utilities. The amount forgiven will be reduced proportionally by any reduction in employees retained compared to the prior year, and also reduced by the reduction in pay of any employee beyond 25% of their prior year compensation. And the point here is that as an employer, you are encouraged and incentivized to rehire any laid off employees or retain all of your workers and to pay them a rate of pay comparable to what you did last year in order to get the full benefit of the forgiveness. Your loan forgiveness will be reduced as you reduce your payroll and as you reduce the amount that you pay your workers. Again, this is designed to discourage people moving into unemployment compensation, and also the goal here is to keep employees connected to their employers so that when the economy opens back up, we can have a very fast recovery, and so that you can keep your workforce. We'll stop right there and answer any questions about how this program is supposed to work. And we're expected to get more guidance from the Department of the Treasury this week with greater details, but I'll do the best I can with what we have.
Great, Andy, that was very helpful. Allison, have you gotten some questions, or Jim, do you have questions? That I know some of these things you were going to cover a little later. And by the way, Andy, as you've spoken, Jim has been highlighting lines in some documents that either came from your office or came from Congress, I guess, so that people could see kind of in writing the very things that you're talking about. So I think that was helpful. Go ahead, Allison, you have something?
So we did have somebody just want to clarify 501c7s are exempt from the loans, correct?
I do not believe 501c7s or 501c6s are eligible. I believe it's 501c3s. 501c19s, veteran organizations are eligible. Tribal business concerns are eligible as well. But I don't see that any other 501s are eligible.
Got it.
So the one, this is Jim Morris. I will be covering this a little bit later, but the one question I had, or the one, I guess, confusing thing that I've been grappling with for several different clients on this issue is, yes, if there's another individual at home that can care for the child, then you have an alternate care. But if that other individual is also employed and is also having to work from home, then that doesn't apply. So those together, those two would then be eligible for the 2/3, or at least one of them. The one thing I didn't see was, I'm assuming, as an attorney, that's always scary, but I would assume that if one of them is eligible at 2/3, the other is not, because then you have alternate care from the one that's having to pay at 2/3 of their salary. But between a husband and wife or two partners, they would get to choose which one of their salaries or which one of them will be stay at home and which one of them will be working from home. Is that a fair assessment?
that sounds like a fair interpretation of it. Of course, Jim, you were exactly right. When we passed that second phase bill, the Family Coronavirus Response Bill, at that time, we did not know how widespread the shutdown would be. And so now you're exactly right. You've got both parents now working from home more frequently than what was originally anticipated.
And one of the things, I'll throw this out now so I don't cover it later, one of the things I've done with some of the employers that I'm working with, as well as one of the companies I run, is I literally said to the employee, you can have your kids in the background, apologize for any noise. We now have a child inclusive work center, and feel free to have them around you. And we will work around your schedule. If you need to put them down for a nap, if you need to be away, whatever it is, that way we are fully inclusive and not trying to allow employees to just not work at all to care for their child. So we're trying to work around that in various ways.
All right. Any other questions? Folks out there? All right. Boy, Andy, we appreciate you taking time from your busy day to join us. And we plan on, you've put a lot of stuff on your website, and I promised your team that we would send people links to that so they can have answers to question and answer material that you've provided. We appreciate it.
Absolutely, thank you. And if any of the business owners on the line need some clarification that we can research for you, we're happy to do so. Just give us a call, and our number in our district office is 859-219-1366. We are happy to connect you with any resources that you need to find out more about your eligibility for these loans, and connect you with obviously financial institutions that you can talk to about this. And Anthony Allen in my district office is going to be providing technical assistance, and his team providing technical assistance to any small business that might be interested in this loan forgiveness program.
Okay. Allison, I saw something just came in. Is there a question you need to pass on?
We've gotten, where does the bank get the loan application, and what about 501c6s? So
501c6, and I think you said they are not included in this.
I do not see 501c6 in my summaries. I've not seen that. The only 501c's that I see eligible are the 501c3s.
And then the question, sort of, how do banks get connected to this program? Is that it?
So banks, we're having conference calls with the Kentucky Bankers Association. The ABA is helping them. We're also at the Bluegrass Bankers Association, which are the smaller community banks. We're also having a conference call with them. They are getting guidance from their regulators right now, and they're trying to stand this up so that they can originate some of these loans this week. I will make one other mention of an important change that we made for lenders that should clear the way for not just these loans, but also restructuring or modification of existing lines of credit. So if you need a little bit of relief or forbearance or deferment of loan payments that are already in existence, we have changed some of the financial accounting rules on a temporary basis. We've changed some of the regulations in this bill so that bank lenders do not have to book loan modifications as, quote, troubled debt structuring classifications. So that should enable and clear the way for many lenders to work with businesses on deferral of payments and modification of loans, or delaying payments of principal and interest on various loans, and putting those at the back of your notes without any negative repercussions for you or for the financial institution.
Right, and Jim just put up in this document that he has, there's a link right on there. So we're going to be sharing this document with everybody after this call, right, Jim?
Yes, sir.
And so you can click right on there, and it's a lender match. Help you find a lender. And I don't know about you guys, but I've already gotten an email this morning from my broker saying, Lyle, we could help you with that. So I suspect that they're going to get to us before we get to them.
That's great.
Super. All right. Andy, thank you very much. Have a great day.
All right, Lyle, thank you. Thank
And
you all.
we look forward to staying in touch. Take care.
Sounds good.
Thank you, Andy.
Thanks. Bye-bye.
So,
Jim.
yes, sir. Lyle, I wanted to just explain to people, I apologize if it wasn't super clean, but I was trying to put things on the screen as he was talking about them. So I put on here right now is this is a COVID-19 relief small business administration application with all of the information that's required. The one before that was the page that had the finding a lender, and there's a lender match that's now available. The SBA seems to be trying to do things very promptly to try to address this. So hopefully you'll be able to get information. I had a lot of this somewhat queued up, and so some of these may be a little bit disjointed now when we go back to the slides, but I did want to highlight as he was talking, and we'll make this highlighted version or non-highlighted version available for everybody as well. This was the information from the U.S. Senate Committee on Small Business and Entrepreneurship with regard to the Paycheck Protection Program frequently asked questions. There's another one that's put out by the U.S. Chamber of Commerce that I had. I'm going to go ahead and cover these now so that you'll see you're going to get some of this information for the loans. And then there's a whole lot more that went beyond what even Andy talked about, or Congressman Barr talked about, that we're going to get into because there's more eligible finances out there for businesses, not just small businesses. So let me get back into this a little bit. And apologize to anybody who thought that was disjointed, but we wanted to let Congressman Barr do his thing because it's critical to have it straight from a congressman. I can't tell you how incredible it is to be able to have that resource available to all of you. So we started talking about this, the exceptions and the clarifications, just for those that joined late or anything else. We went down through the timeline. I'm not going to do it again. But then when this came out, there were some updates that were provided. March 20th, we talked about the different relief, and we've gone through this slide, and I'm just going to very quickly, for anybody who joined late, we've already talked about that. We're on to the next slide. We had talked about this as well. This is the paid leave, the 2/3 of sick leave, and the part that I think caught everybody on, I think it was a well-intended bill. I don't think anybody thought that it would be this widespread with the 2/3 of salary working from home. The part that I wanted to add in that I'm pleased that he clarified or that he addressed, there's nothing in there that talks about how only one of the two can select, and there's nothing in there that talks about what is alternative care, because right now you can't really take your kids to your grandparents because you're trying to quarantine from your grandparents to keep them safe. You can't take your kids to a babysitter because they're not supposed to be babysitting. So you've got all kinds of limitations on what is an alternate care. So the reality is one of the two may be able to get the 2/3 salary for 10 weeks. And the concern that we have now is, so you're going to pick the one that has more salary and they're going to stay at home, and the other one's going to work full time from home. You're going to have some gamesmanship, and you're going to have challenges, and you're probably going to have litigation based upon people thinking that people are gaming the system. That's going to happen with a new bill like this. So we were right here when we broke for a second. How does an employee qualify for paid sick leave if they're unable to work or telework? Are they subject to a quarantine or isolation order? Everyone is. Are they advised to self-quarantine? Everyone's been advised to self-quarantine. Then the rest of these are the common sense that was built in, and then when this was written, everyone was thinking that an individual would be subject to a quarantine. Gee, you might have symptoms, stay home for 14 days. Not the entire community stay home for 14 days. Then number 4, 5, and 6 came in, and this is where people are getting burned, employers. Caring for an individual who's subject to a quarantine, caring for a child whose school's closed, or experiencing other substantially similar condition, and an employee qualifies for expanded family medical leave if they are caring for a child whose school or place of care is closed. Again, that's across the board right now because I'm not aware in any state now that any school is open, and child care for the most part has been shut down as well. So then they came out again on the 24th with additional, and I'm going to put these up here so you can see them all. This is the calculation of benefits that the DOL and the wage and hour division popped in with, and that was $511 a day for reasons 1 through 3, which is you're at home for a quarantine and isolation or symptoms. You have $5,110 in the aggregate over the 2 weeks that you're required to pay. Employees taking leave, this is requirement 4 and 6, which is the at-home schooling is basically the way I look at that. 2/3 of your regular rate or 2/3 of the applicable minimum wage, up to $200 a day and $2,000 for the aggregate over the 2-week period. Then also the child care under Section 5, which is the additional 12 weeks or additional 10, depending on whether you've done the 2 weeks first or not. So you get up to 12 weeks total, 2/3 of your salary, and if you've already used the 2 weeks, it gets deducted. And a question came in from last week saying, is there an exception for those that have expired their FMLA under the old FMLA? Originally, the version that the Democrats were pushing over that weekend, that if you remember the Families First got started out with one version, then it changed over the weekend, and then it got adopted in its original version by the Senate, not the modified version. The modified version had 12 more weeks. That got changed. It is now, if you've already used FMLA, you don't get to reuse it. It is not consecutive, it is total, running concurrently. So these are the provisions, and that's the dollar amounts. Really the information that they provided on the update on the 24th on calculation of benefits didn't change any of the calculations. They did come back with, and we've gone into a lot more detail on this with Congressman Barr, so I'm not going to waste a lot of time on it, but there's a dollar-for-dollar reimbursement. IRS has some tax relief available. Department of Labor came out with it, and the Families First Coronavirus Response Act came out with a number of methods to make things right, including the loans that we're going to get into a little bit more detail. And then this is the second bullet on here is what he was referencing. If you don't have the ability to cover the cost of the paid leave and so on, you can request an expedited advance from the IRS, submitting a streamlined form. However, the form's not available until today, I believe. It's not up yet. It said during the week of March 29th, and I haven't seen it as of this morning. So that was the update on the 24th. The 26th update, and I did not put in the 28th. The 28th popped in on Saturday night, and honestly, it basically just says, go look at all the rest of the pretty forms that we did. On the 26th, they came in with a field advisory bulletin. Field advisory bulletin talks about the temporary non-enforcement period. If you recall, earlier on in the slides, I pointed out a 30-day period, and I said it was assumed that that would start on April 1st and run through April 30th. They came out with it saying it will not bring enforcement. I'm going to read this precisely because a lot of questions were asked last week. I had 3 different webinars, and they got more and more pointed with, should we fire everybody now? I hesitated on one of those question and answers at the end, and I told you be careful because this doesn't say it's retroactive. However, my concern at the time was I think somebody's going to come up with a way to say you're trying to do this to avoid the ensuing law. Well, they did, and they don't say how. They don't say what they're going to do, but this is the critical statement, and I'm quoting it. The department will not bring enforcement action against any public or private employer for violations of the Act. This is the FFCRA Act, occurring within 30 days of the enactment of the Act, i.e. March 18th through April 17th, 2020, provided that the employer has made, quote, reasonable and good faith efforts to comply with the Act. The problem with that is the Act is not enacted until April 1st. But the Department of Labor, I believe, seeing the fact that people are just going to do mass layoffs to avoid the ensuing April 1st, Family First Coronavirus Response Act, has come up with, we are going to go from March 18th through April 17th. That's the day the bill was signed into law. And so they're going with the date that it was triggered, so that if you take action, employees are going to be able to claim that this was in response to the ensuing act. They then go on to provide qualifications for what is reasonable and what is in good faith. And that's why it appears to suggest potential liability for terminations leading up to the April 1st effective date. Now, if a business has a legitimate business reason for taking action before April 1st, meaning you have no business, you aren't able to continue payroll, I believe you have a good faith action for taking the actions that you're taking. However, they have the ability to say that they're going to engage in triggering an investigation because you did this after enactment. So just be wise, be mindful, because you're going to end up having enforcement actions through the DOL, and you're going to need to contact an attorney to handle that for you. They also came out with a number of employee rights. They have this in Spanish and English. They have employer instructions. They have posters. And then I love the question on the frequently asked questions, hey, you've got a heck of a lot of posters you're asking us to post, and I don't really have a lot of space. Is there any way that I don't have to post all of these? And the answer from them is nope, post them all in a conspicuous location at every branch, every location. And by the way, since I talked about work at home last week with work at home strategies, if you have people working at home, they have to post these in their workplace at home, or you at least need to instruct them to do so because that is their workplace. They have to have their OSHA information, their employee rights, their wage and hour laws, their paid time off instructions, and their break times and so on. So I put this on here just because they anticipate you putting this up immediately, because this is now the law. These are their rights. There's a whole series of frequently asked questions on the March 26th. And again, they came out with more guidance on the 28th, but for the life of me, I don't know why they did it other than to say, hey, we've come out with more guidance, read this too. I didn't see anything worthwhile other than perhaps including links to each one of the previous updates, the March 26th, the March 24th, and the March 20th, as well as the actual frequently asked questions that were already in there.
Hey, Jim.
So that is the first part, the Family First Coronavirus Response Act. Yes, sir.
With regard to the posters, I know a lot of folks get their posters from the Kentucky Chamber of Commerce. So I checked with them, and they are coming out with a digitized version of this. So you can print your own posters and you can send it directly to people that are working from home, which is probably everybody right now. So then you can explain to them, you know, please make yourself aware of this. They're probably not going to put it up on their kitchen, on their refrigerator at home. But I think it's wise that they're doing a digital version of the thing, so it's easier to get out there.
Right, and I was going to put up there, for those that want to go, I know this isn't part of the slide. I wasn't originally going to do this, but for those that want to go to the Department of Labor, they literally have on the Department of Labor site all of their information. You click on the guidance for preparing, you scroll down, and they have all of their announcements here with their sick leave and so on. And when you click on the brand new one, it has the fact sheet, it has the fact sheet, it has the posters, has all of the information that you're going to need to put on there. And you can print them straight from the Fed website as well. So if you go into each one of their links, I think it's the 24th is when they put the poster up here. So the questions and answers are here, the fact sheet for employees, and it pops up with information, and the poster then pops up. And I think it's on the 26th, actually. I clicked the wrong date. So one of the risks when you're trying to do this on the fly is that you look at the wrong information, but it's out there. You can pull it up with the question and answer, the posting, and the field assistance bulletin talking about the 30-day non-enforcement. Here's your fact sheet for employers, your fact sheet for employees, and then you can post the actual poster that I put on the screenshot. They're all right there.
Great. I know we've gotten quite a few questions. I've even gotten some. Allison, are you okay to start this, or is Autumn going to do this?
I think I can start it, but I apologize if you'll hear a train in the background. My littlest coworker is very busy. So we had a question about, and I think Jim's really addressed this mostly, but employees who were laid off prior to 3/31 but are still getting paid through 3/31, do they qualify for any type of this leave?
They will qualify on April 1st as if they were any one of the other employees. Now, it's not going to be cumulative, meaning you don't get to piggyback and get more, but you are entitled to the leave that's there. So let's say that you are being paid unemployment before that. It wasn't clear by the question. If you've already laid somebody off, then no, they're not employed currently, so they won't fall under the April 1st. The concern I have is if you're laying people off so that you are not going to be affected by the April 1st, that's going to be investigated. If you have emails out there among your people saying, hey, I think we ought to fire everybody now so we don't have to pay before April 1st when this gets put in, and that email gets out there, I have a feeling the DOL is going to investigate that. That's a concern. The other thing I want to say, and I'm jumping forward a little bit because the CARES Act kind of builds on this. I said last week, the Family First Coronavirus Response Act was one side, and the inside information I had was stay tuned because the other side's going to help employers. This was the employee side. Congress was democratically controlled. The Republican Congress is going to come in with protections for the employer. It did. So we're jumping forward a little bit. There are reasons to not lay people off right now. The congressman talked about some of this, about, hey, you know, if you lay people off, you're not going to get as much written off on your SBA loan. There's a whole lot more. The CARES Act, and it's 835 pages or whatever. I'm still trying to learn it. Senators adopted it without knowing what's in it. Congressmen adopted it without being able to read it. I'm reading it. There is a lot of reasons built in to keep your employees employed because they are literally paying you to keep people working at home or on your payroll or figuring out other ways to unpaid leave or paid leave something because they are working on free money for employers. We're going to get into that in detail here in a little bit.
Okay. We had a couple of questions too about who is considered exempt from the act. So if an employer has more than 500 employees, are they still required to post and communicate, or are they exempt from any of the posting requirements?
The posting, I'm sorry?
Just around the FFRCA.
So the posting requirements, this poster here, you know, it's interesting because the law requires this to be posted. Interesting question. It does not apply. Whoops, sorry, I went the wrong way. It does not apply to employers with more than 500 because, let me see if my highlighter's working here. It is not. If I can get it to highlight, it says down here in the small fine print, wait, where did it go? Right there. It's not, my highlighter's not working. Right there. Employers with fewer than 500 employees and certain public sector are eligible for 2 weeks full. So the reality is this poster does not apply to employers of over 500, but there's nothing in the DOL guidance that says if this doesn't apply to you, don't post it. My recommendation is I don't think that this is something that you would need to post if you have more than 500 employees. However, they're very carefully wording at which location. So they're trying to force more knowledge. If you have any doubt about it, what's the harm in posting it? That would be my answer. You can even post it to people saying, look, I'm putting this up here because the DOL says to, but we have more than 500 employees, we don't qualify. You're going to see here in a minute there's some additional things that still apply because of the CARES Act. But this particular poster I don't think does. And Allison, one of the other questions that you had asked or had indicated that you were getting a lot of feedback on is how would you define unable to telework? Because that's one of the things here. If you're not able to telework, then you have to be paid this. That's an employer-based question. The law basically says if you can find a job for them to do, find a job for them to do. If you can do it from home, fine, do it from home. One of the issues that can cause a problem for unable to work from home is they don't have internet. Well, guess what? Then buy them a MiFi. MiFis are pretty quick right now. Have them work off of a MiFi. Have them use their cell phone. Buy them a cell phone. It's a lot cheaper to do this than to have mass layoffs at 2/3 of salary for 12 weeks for them to stay at home with their child. It's going to take some policy changes. You need to rewrite some of your policies. You need to have a work from home policy. Just like I said, these posters have to be sent to your work from home employees. You have to let them know what they're entitled to at home. You need to rewrite your workers' comp and so on. But this particular poster, my recommendation is I don't think that you need to have it if you're over 500 because it says literally eligible employees are only those that have fewer than 500 employees. I don't think that this one applies. They didn't say that. I'm sure maybe they did in yesterday's and I just missed it. But the reality is it doesn't apply to you.
Another question about the exemptions is someone wanting to know if we can confirm it is bodies and not just full-time employee equivalents as a guide for the 500. So is it just 500 people employed or do they have to be full-time equivalents?
500 people employed. They don't talk about full versus part in the definition. So far, it is a flat number of 500 employees. And one of my customers or one of my clients deals with temporary employees all over. And those employees are counting toward the number. It's not just their internal, it's their temporarily assigned employees that they assign elsewhere. Now, if you have temporary employees at your facility, that's an interesting question. We talked a little bit last week about the brand new joint employer status. They count towards you as a joint employer. Chances are you may have a problem with the DOL under their new definition of a joint employer, but under this provision, they are not your W-2 employees and 1099 don't apply either.
And then I know we've had a lot of questions from people about who is considered a healthcare provider under the definition so that they could be exempted. And so I just wanted to point out that the DOL did post in their frequently asked question sheet today a breakdown of who is considered a healthcare provider. So for anybody that wants to check that out, it's question 56.
Yeah, I was try to drag that down, but it's going to be too hard to do. So let's go through a few more, because once you see the CARES Act, there may be additional questions or there may be additional answers. And so we'll come back to the question. If that's okay, Lyle, we'll jump forward with the CARES.
One more that came to me on this subject. Do you want to jump through without any more questions, or can I ask one more?
Sure, go ahead.
I got one about, it talked about covering the cost of the employee, but also the cost of insurance. I think it referred to medical insurance. Does that include other kinds of insurance like workers' comp or life insurance, dental, other things that the employer might cover?
The SBA loan and the discussion from Congressman, yes. Some of the other things, you're going to see some of that in the CARES Act coming up. Mm-hmm. So if I could jump forward, I'll cover some of that for you.
Okay.
All right. Yeah. So CARES Act, the big thing everybody heard about, which isn't really related to your business, but individually, if you're making less than $75,000. Now, I've seen a couple of different on these totals at the end of my slide here. This is the number that I got, so I'm highlighting that. I saw today, and I ran out of time to be able to confirm it, that the 198 may be 200, and the 146 may be 150, and the 100 may be, or the 99 may be 125. Those numbers are bouncing around because apparently that was a debate, and I don't know who's right. My source had that at this particular calculation, but just think of these numbers as close. $1,200 per person for anybody making $75,000 or less, or $112,500 for head of household, $24,000 for married couples with adjusted gross of $150 or less. You also receive a $500 credit for each of your children at home. That credit is reduced by 5% of the taxpayer's adjusted gross income over the applicable threshold, resulting in a phase out at 99, 146.5, and 198. If I'm wrong on that, I apologize, but it's close. The gist of that is they were trying to assist lower income to middle income America and not wanting to benefit people over a certain threshold. So this figure here is not really designed to further assist. They assumed that the family's first coronavirus plus this cash payout is sufficient for individuals. The other thing that they did, and this is the key, and Lyle, this is the biggest thing, if out of the CARES Act, if anybody wants to take home for businesses, the two largest aspects of this update today, it's this one and the next one. Employers and self-employed individuals can defer 6.2% payroll tax. That is the employer responsible payroll tax to the federal government through December 31st. Now, again, the key here is defer, not free money. So please don't think that you can just spend this and not pay Uncle Sam later, because in 2021 and 2022, you are responsible for repaying to the government the 6.2% payroll tax through the end of 2021 and the other half through the end of 2022. This is huge because this means you get to pocket temporarily the 6.2 payroll tax that you've been paying for every one of your employees through December 31st. The second one may, for some of you, be even larger. Now, the caveat to all of this is I hate taxes. I am not a tax specialist. Please don't call me with your tax questions, because I will just defer to my accountant to handle them, or I'll refer you to them. I don't do taxes. I know only what I need to know legally to provide the information I need to give to my customers and my clients, and I tell them to contact your CFO to have your CFO give you specific guidance. However, the second part of this is huge, which is employers have the ability to recapture the 3 years of the net operating loss. That's 2018, 2019, 2020. That's critical because if you look back, the Tax Care Act, the previous tax act that was adopted under the Obama administration, shut down any business tax incentives and any business carry forwards and clawbacks and so on. What this did was throw that out for the, it was already there for 2017, but for 2018, 2019, and 2020, there were some tax disadvantages that were built into that act that made it difficult for businesses to recapture. The net operating loss of this year, you will be able to go back and claw back some of your gains in prior years. Now, the interesting thing was it said to do this properly, you need a very competent CFO and a really good attorney. Now, you need a good CFO to mesh what the attorney's telling you that you should be able to do on a net operating loss, to mesh that in with prior tax returns, reopen those tax returns, and apply this to your gains in prior years to spread your losses out and get refunds back from the government. Now, again, I'll be working with a CFO. I won't be giving any tax advice, but this second thing on here, the second part of, and if you need to have anybody look at the section of the act, it's section 2302 of the CARES Act, which is the Senate bill phase 3 part of this act. This is the part that was built to assist businesses. It also confirms the Emergency Family Medical Leave Act, unemployment and sick leave benefits by enhancing the total and partial unemployment benefits. Included in that, the self-employed independent contractors and those who have previously exhausted unemployment. So this allowed extra benefits to those that had already exhausted. It allowed for independent contractors. Last week I was asked about there was I think somebody said, what about people who give private lessons? Those are independent contractors. Those are self-employed people. My advice last week was stay tuned because I think there's some protections coming in the Senate Act, but it's not done. That ended up being in there. So self-employed and independent contractors who previously didn't have a whole lot of protection under the Unemployment Act have it now. So you'll be able to have those people apply. My recommendation right now to everyone is apply. If you've been laid off, if you're a babysitter, let's use that example, and now you can't babysit in your home because you're not allowed to have gathering of more than X number of people and so on, apply for it because the reality is this is allowing self-employed and 1099 independent contractors to apply for unemployment if they've lost their regular steady income. The other thing, the big thing is it expanded it to 39 weeks. And the other huge thing for anyone who needs it, it expanded it to $600 additional per week. The example given was for New York. I think they capped theirs at $511. So this would allow an additional $600 on top of the $511 unemployment insurance that New York State allows. This does not apply to anyone who can telework or anyone who is receiving sick leave. So if you're on your 2/3 for that 10 weeks or 12 weeks, or if you are teleworking and your employer is allowing you to work around schedules with flex time, then you do not apply for unemployment. That third one is designed to have employers take a hard and fast look at, are you better off trying to figure out a workaround from home? Are you better off laying people off because you're going to be paying a lot of unemployment insurance and having to bump in your insurance rate with your calculations and so on? So you're going to have to sit down with a competent CFO to figure out how this whole package will help you. Get some legal guidance as well on the impact of some of this on your ongoing operations, rebuilding of your policies, so on and so forth, like we've talked about in the past. Oops. So it also provides loans through the small business. The one thing, and this is in addition to what Congressman talked about, the loans that you're giving do not allow for compensation of individuals in excess of $100,000. So those highly compensated employees, you need to be careful with how you pay, because you're not going to get reimbursed on that, and it precludes some of those payments. The forgiveness, we've already talked about this. The one thing that you need to know, I just talked to you about the CARES Act 6.2 payroll. The second part on here is critical, because with regard to this part right here, if you are getting your loans forgiven, you can't double dip and borrow against the 6.2 payroll tax without any discount. It's one or the other. So if you are getting and obviously you would go with forgiven over deferred, but you can't use the forgiven and then say, well, now I'm going to withhold. To the extent that you are getting your loans forgiven, that amount has to be paid. Then you can get the loan for the remainder of the year after that 8-week time period that he talked about. Questions and answers. And yes, there is so much more. I could give you 20 pages on the tax implications of the CARES Act. Literally 20 pages breaking down section by section of what they're doing. There's some small business built into 2301. 2301 says that it also can apply to some of the big businesses, so long as they fall within certain exceptions. And they're not the same exceptions as the Family First that was referenced by Congressman Barr. There are a few other things that you may be able to qualify, but you're going to need to pull the statute, get legal guidance, and then talk to finance guidance with a CFO. If you're not big enough for a CFO, reach out to your tax accountant. They'll have some information for you. But those are the main talking points. Allison, Lyle, anybody else that wants to ask questions? And I know there's going to be several. And before you ask, let me just be clear. I may answer with I don't have a clue, because I tried to figure this out. I had less time to figure this out than the senators had debating it. And I didn't get the text of the bill until Friday afternoon, Friday morning. We decided to do this update Friday midday, I think, was when we made the final decision. I've been reading all weekend, but trying to look at 835 pages of text when the sun's shining and everybody else is able to go outside and sit out there was kind of depressing. So I'll do the best I can. If I can't answer it, we'll try to get you answers, but be prepared for an I don't know.
Okay. We've got a lot of questions that really are more geared toward the FFCRA, but one that might be applicable to both. We've got a question about someone who's basically, they have an entirely virtual workforce who's paying 100% of their pay to them right now. Can the organization recoup or apply for any credits through either of these acts due to inefficiency of work for those that are working from home, that may be taking care of children who are sick but not actually utilizing leave?
No, because they don't qualify for, well now, I'm sorry, I won't be that blunt. They don't qualify for the 2/3. They don't qualify for the sick leave because you've managed to make them available to work from home. You do qualify for the 6.2% payroll tax starting April 1st. Actually, that's not true. I believe that that is retroactive, so you need to look into the date. I think that that one is retroactive to February, maybe to February 15th or February 10th. So I apologize, I don't have the precise date, but I believe the CARES Act 6.2, let me see if I have anything with that on it, is retroactive to, give me a second. I'm sorry, I'm looking off the screen, but I've got some other things I put up for just such an occasion. I believe that the CARES Act starting date, I'll need to update that later unless I find it while we're asking different questions. It's hard with the number of things I have open. No, for the period beginning March 27th and ending before January 1st, 2021. That's your self-employment taxes. The carry forward is 2018, 19, and 20. and the Payroll Reduction Act. Yeah, it's March 27th. So sorry that I was right the first time, should have stuck with my gut. March 27th through December 31st, the person that has people staying home, you don't have to pay your employer-based 6.2%. You can get a business loan to pay them to work from home if you're a small business, and you can qualify under the SBA for 2.5% of your total payroll, based on the calculation they had, or 250% if you looked at the way I wrote it, 2.5 times your 250%. You can qualify for that and write that off, but not before the March 27th time period, but moving forward until, for that 8-week period after you qualify for the loan, you can get that loan forgiveness. And it might be worthwhile to do that just to at least get some free money and then pay it back to the SBA.
Okay, we had another employee who asked specifically in regards to the paycheck protection coverage. So they're an owner of a small business. If their salary is less than $100,000, are there other perks or forms of compensation, insurance, et cetera, that they could include in the salary figure cap of $100,000?
I'm not positive on that. It talks about in the specific paycheck protection program. You notice in here, and I put it back on the screen, I'm trying to look down through it. It does not talk in here. It says that you can pay payroll salaries up to an annual rate of 100. Hourly wages and cash tips, paid sick and medical and group health insurance premiums. To me, now this is not the law, this is the U.S. Senate Committee on Small Business and Entrepreneurships. Sorry. If you got a notice up on your screen, I apologize. This sounds as if it is annual rate of pay plus. It does not say combined. Now, the act itself is what you would have to look at to make sure as to what will be forgiven and what won't. But the end result is, so if you pay the amount and it turns out that, yeah, the $100,000 is going to be reimbursed, but not the sick leave, so you're just out the sick leave. That's just on the loan forgiveness. It doesn't mean you can't pay it. It just means that you won't be able to get that amount forgiven. So worst case scenario, you end up with $100,000 and you don't end up with more than 100. Best case scenario, you end up with 100,000 plus. So I think you go about it on the loan, get your loan, pay off what you need to, including your own salary up to 100. And if you make more than 100, you're not going to get more than that. You'll only get the pro rata over the 8 weeks up to 100,000 for that employee. But make sure you actually get legal guidance on the actual bill, because like I said, I was drinking from a fire hose. This synopsis is great, but unfortunately, you cannot rely upon a U.S. Senate Small Business and Entrepreneurship publication as a defense to a statute. You have to have, the statute must control, not their interpretation of it. So this is good information, but it is not binding. The law is what we would have to look at.
Okay, so most of the other questions that we've received are about the FFCRA. Do you want me to go ahead and ask those or wait until the end?
Yeah, I mean, honestly, everybody on the phone, basically what we're dealing with now is it's a combined phase 1, phase 2, phase 3. So it's the legal, the federal response to the coronavirus crisis, and they're all intertwined. So the questions, that's why I said, let's go ahead and do these where we end up with questions from everybody, because I think that this is the reality is it's a combination of the two, and I figured that we would end up with a lot of questions. And for those that are wondering what's next on the agenda or remembering what's next, Honestly, the only thing that's left now, I'll jump forward to let you know. It's the, whoops, wrong place. It's the Kentucky unemployment update. And the Kentucky unemployment update may sound like a big deal, but the FFCRA and the CARES kind of took control. There's not a tremendous amount. It's governor initiated orders, and it's one slide, so we won't need a lot of time to cover that. I think we're better off just answering questions as you have them. We'll do a quick run through on the Kentucky just in case people have a lot of questions about it. And then from there, at the end, we'll have a question and answer about Kentucky. And if there are additional questions, we'll try to cover those too. I'm good. We're learning as we go, just so everybody knows. So we're doing the best we can.
All right, so we had an employee ask an employer ask if an employee chooses to self-quarantine, so they don't have any symptoms, no proof of contact with someone with COVID-19, just basically they're fearful. Are they still eligible for this sick leave?
Yeah, we had this question on the frequently asked questions that we sent out after the last presentation. We had a question on there about this. What do you do if somebody just says, I'm not showing up to work? The original guidance from the CDC was that that was not an appropriate response, but the CDC, believe it or not, has now changed that to say, you know, there is a need for quarantine, and people are in need of wanting to stay home to follow the governor's guidance. Now, I don't know if this happens to be spelled out in there, but is there, Allison, is there anything defining whether this person is essential personnel or not?
No, the question did not include that.
Okay, so let me give the hypothetical first. If they're essential personnel, the question then becomes, is this something where this is part of their understood job functions? Let me take a nurse, a doctor. When you signed up as a doctor or a nurse, or you're part of an essential function, or you're part of an essential healthcare personnel, and you knew that part of your job was to potentially be exposed to these types of viruses and illnesses and pandemics when you did it, chances are you're not going to be able to say, I don't really want to show up. If, however, your job is to work at Toyota or work at Hyundai or work at Lexmark or anywhere else at a factory location or a business location, then you have a little bit more ability to say, I can do my job from home. Is it okay if I do so? The third example is, what if the person can't work from home? Let me pick a factory worker at Lexmark, and they just say, I'm not showing up because I don't want to be exposed to this, so I'm just not going to show up. You're in that gray area of enforcement of this time period, and there's no guidance yet as to how do we handle somebody that before April 1st says, I'm not able to work, and then now we're going to be within that time period where they may get that 80 weeks or 80 hours, 2 weeks of salary to have them work or not work from home on their sick leave or their unpaid sick leave. There's a question there that I'm not sure has been answered about this lag time between enforcement and adoption on Wednesday of this week. What do we do for those people that are laid off on Monday of this week and they would have been fully covered on Wednesday? The DOL seems to be suggesting that starting March 18th, those people may have some protection. So if they're inside of that 80 hours, the law has not, the regulations, the interpretation, the legal fleshing out has not happened as it normally would. So we're all staring at the statute going, what do we do? It's a very scary time for implementation. One of the big clients I have, it's not a wise position, so please don't do this, but some of their answers, even when legal is getting involved and I'm saying, guys, I don't know, is, hey, this is unprecedented times. It's not like anybody's going to look at us and say, well, you made a mistake and hold us legally responsible. And I'm like, that's not a very smart answer, because you are expected to comply with all laws. It does not matter whether they're brand new laws. So please don't do the, well, this is unprecedented times. Nobody's really going to hold our feet to the fire. Let's just go forward. You can get by, again, if you look back at the DOL guidelines that we had up on the screen a little bit ago. Let me see if I can get that back. If you look at the guidance from this, good faith efforts to comply with the act, you're going to be okay. I don't think that, well, it's unprecedented times, nobody will hold us responsible. That's not going to fly. But to not answer the question, to answer it, not sure what's going to happen to those people that you're going to want to lay off, let's say starting today, and they would have been covered on Wednesday. Chances are you may want, at this late date, you may want to consider that this is probably going to be enforceable. Quite honestly, I'm surprised that they didn't just say, we're going to start the week of April 1st in enforcement, because everybody knows that it's a Monday to Friday payday or every other week. And so this is, be careful just laying people off, because they say right there, if you did it in good faith and reasonable efforts to comply with the act, but then they talk about a date that is before the April 1st implementation date. They give March 18th. You're really close to the April 1st now, and the DOL is going to try to enforce this, it looks like.
Okay. So I feel like you kind of talked about this one, but we'll just ask the question explicitly so people have exactly the answer they're seeking. So employees who have been working from home successfully, so who have been able to telework, what do we do if they now decide that now that this leave is available, they suddenly can't work from home? What can we do on our end?
So if somebody just says, hey, I can't work from home, I would find a way for this. This is not legal advice. This is just common sense or business advice. Find a way for them to work from home. And if they then say they just can't, now, if they have children, you have to be careful. If they have somebody that's quarantined, let's say they're taking care of an elderly parent at home, and they really are falling within the, I think at this point you have to consider that it's not just FMLA, because FMLA allows you to care for somebody who has a recognized condition. And I think you're going to have some trouble now with interpreting not to include coronavirus or potential catching of coronavirus when you have a national declaration, a state declaration, and local declarations saying that we have a state of emergency and everyone must stay quarantined. So the reality is, if somebody looks at you and says, I can't work because I have an elderly parent, I think the first step is, we'll do flex time around your schedule. I really can't do that. Or let's back up and start with, I don't have a internet at home. We'll give you a MiFi temporarily. I don't have a phone system. We'll give you a cell phone. I got an elderly parent at home. We'll give you flex time. If they tell you they won't do any of it, first of all, I'm not sure that you really want that person to be a long-term employee anyway. If this person is trying to get out of work to the extent that they basically want to take advantage of the government, and they're going to take this, fine. Let them have what they're going to get. Pay them their 2 weeks. Pay them their 2/3 salary to take care of somebody at home, and consider it a gift that they're not going to be working for you. You can lay them off because of business activities, but the law is trying to keep them still employed. You're just going to have to make a decision. If they can't work, then once they're done, and move on. I think that it's a shame that people are going to game the system like that, but you're going to have in every business, and you probably can figure out who you think it's probably going to be, there are going to be some people that are going to use this and abuse this. My suggestion is make sure that you read the Act closely enough that you can get yours out of the Act as well. The 6.2, if you don't need to worry about it, invest it. Invest it in something and make some, don't do it in the stock market, but hold that money and use it for something to pay off debt that it's at a higher rate, because you're getting it cheaper. If you can get the SBA loan, pay off your mortgage for 2 months for free, your rent for 2 months for free, your payroll taxes for 2 months for free. Take a look at it, because they're giving you free money everywhere you can look right now. This is a tax grab act, and you need to take advantage of it, just like your employees are probably going to take advantage of working from home. And if your employees are working from home, I know I'm going to repeat something from last week. Make sure you have 3 things. 1, a workers' comp policy that covers them working from home. 2, make sure you have an OSHA protected, safe work environment for each one of those employees. 3, you're posting all of your notices. And 4, probably most importantly, you have to establish your work hours. If you don't, you may find an hourly employee with a 24 hours a day bill that they're submitting to you because they worked nonstop. You will have to pay overtime unless you specifically spell out in policies that they don't work overtime without prior written permission, and that they can't perform work outside of their business location, the one you designated for, or they designated, you saw pictures of it, and that's a safe OSHA environment, because you don't want people laying in bed answering phones and typing that get their broken neck or carpal tunnel, and now you're paying workers' comp for them to stay home. And you all know somebody who's going to take advantage of this to find a way to be injured and not get paid, or not worked and still get paid. So just be mindful of that.
Okay, can you talk a little bit about seasonal employees? So we have some people who are concerned because their seasonal employees normally start around April, and they won't be needed this year. So are they still eligible for leave under this act?
It depends on how, and I don't have the date specific in, I think it was a 3-month. So please don't quote me on this. I would need to look at the specific act under the FFCRA. If they have not worked for you in the recent past, they don't qualify on April 1st. And so let me take, I think there were some questions. It may not have been on this one. I apologize. There were several I was on. May have been Horse Park, Keeneland, and Horse Farm with seasonal workers, tobacco farms, farms in general. If you have not had them working in the very recent past, then they don't qualify starting April 1st. There is a time period to reach back to figure out the timing of part-time employees. It was not intended to be seasonal employee who work for you for 3 months or 6 months and then they're gone for 6 months. But make sure you get legal guidance specific as to the act itself before you act on that, because I have not had that particular customer request of me yet, so I don't have firsthand nailed down section by section guidance on that. And before I give anybody actual legal saying, oh, don't worry about paying them, I need to make sure that, I mean, if somebody reached out to me and said, hey, I need you to give me the answer to that, it wouldn't take long to find it, but I haven't pulled it out yet. And I don't want to give you wrong advice, but my belief is there was a short time period in duration for this act to reach back, and it wasn't designed to try to punish the employer. It was more for the person who has been working for you part-time, 12, 16 hours a week, and they were trying to figure out, hey, what's a reasonable unemployment payout for them? What's a reasonable 80 hours or a reasonable time period? And this was a reach back, look at this and see over the last 4 weeks, hypothetically, I don't remember it exactly, reach out to 4 weeks and say, before the coronavirus started, so let's say January 15th to February 15th, what did you work over those 4 weeks? Carry that forward. That's how much that person is going to get the average of those 4 weeks, multiplied by the required payout.
Okay, and so this question is basically about this sick leave. If someone were to only use a couple of days and then return, and the question is, can they use it intermittently, and is there a difference between using it for sick or for childcare?
Wow, there's a whole lot to unpack there, because let's say that the person is individually sick, actually sick, coronavirus, or suspected coronavirus. The person needs to have the 4 days off, being actually sick or suspected of being sick. They get a negative test, that comes back, now they're able to go back to work. So they have 4 days, that's intermittent. Now they tell you that they need to be at home to care for their elderly parent. That can be piggybacked on the back, or they need to care for their child. Let's say though, person for 4 days is on their suspected coronavirus, they have alternate care for their child, and they don't need to be at home to care for anybody. So they come back to work for 2 or 3 days. Then their parent needs to move in with them, and so now they need to take their 80 hours. Or their child is sick, their child's school closes, so now, or their alternate care is gone. Now they have to care for it. That type of intermittent can happen. Bouncing back and forth between, I'm going to take 2 days off, but then I'm going to come in, then I want to take another 2 days off for the same reason, then I'm going to come in, that's not going to fly. That's not what the intent of the act is, but you've got something that both Congressman Barr and I said is odd here, because when they adopted this, there was no nationwide shutdown. There was no governor mandated no business can operate with a front-facing business. So this is we're in a new world. Can I see somebody trying to bounce that around? Sure. Does the act say they can't? No. Does common sense say they're talking about 80 hours for a coronavirus shutdown? Yes. So if they are staying home because of the coronavirus, it's 80 hours paid to stay home because of the coronavirus. It's not, hey, take 16 hours, come back to work, take 16. We're under a mandatory quarantine. They're getting their 80 hours to be part of that 80-hour quarantine. They're not getting it to bounce back and forth to potentially spread the virus. So my common sense, non-legal answer is this is designed to be 80 hours straight to stop the spread. It's not designed for people to say, I'm going to pick and choose when I want to use the coronavirus. That's not cool. That's not the way to do it. I think you are going to basically be able to dictate, this is the first 80 hours, then you can have the 2/3 or the shutdown or the layoff, but this is, you get the 80 hours, then you're out.
Sounds good.
And if I'm wrong on that, that's the dumbest thing I've ever heard of some ambulance chasing attorney that can come up with that and wants to fight that. I'd be happy to be on the other side.
Okay, so we have a question about people that need the leave, how they request it, kind of what the requirements look like. So I do know that the Department of Labor posted a little bit of guidance again this weekend on their website about what they would require for employees to turn into employers. It sounds like things like name, qualifying reason, a statement that you are unable to work, documentation such as the source of your isolation order, the name of the healthcare provider that recommended you stay home or diagnosed you with the coronavirus, and then similar documentation for the EFMLA as you would get for regular FMLA. But clearly, because so many healthcare providers are overrun at the moment, it might be a little bit harder to get some of the documentation than normal. So what guidance would you have for people in that?
Yeah, I just pulled up the DOL and put it up on my screen so that you can see it. My recommendation is take a look at the DOL because unlike the Senate SBA document that we were looking at a second ago, this is binding because the DOL was ordered by the FFCRA to come up with its guidance. This is the guidance, so you have an absolute right to rely upon the guidance. So if you pull this up and you take a look at this, now this is the employer question and answer, okay? Calculating it, overtime, everything else, it's all in here. It talks about how much to be paid, regular rate, all of the sick leave is in here. And I think you ought to just go to the website. It's at DOL Newsroom Releases, or you can actually just go to the Department of Labor and click on coronavirus, scroll down through it. It has fact sheets for employees with all of the answers and all the questions. It talks about what you're going to get, the qualified leave, how you do it. There's an application in one of these. That's what I was looking for. I know that they issued that release, and I don't recall. I think it was the one on Saturday night, Sunday, where they came out with the actual latest round includes questions and answers, critical issues such as the definition of a healthcare provider. All of these things are on here. They've got them in Spanish. They've got various things. And I'll be honest, some of the things that I've tried to get for you all to synthesize this, I've gotten from that website. The problem is it's changed every 2 days, and they come out with new guidance, sometimes contradicting their previous guidance. So if you're going to rely on this, make sure you grab it, make sure you look at it every day. And what I've been doing is I've been screenshotting so that if I've been giving answers to someone, to a client on a day where this was the guidance given by the DOL or this was the instruction and mandate, I have that so if they ever change it, I've got the ability to show, well, wait, when I gave the guidance on this day, this is what you said. Then you changed it, but we acted on the guidance you had published on March 20th, March 23rd. That's bizarre to say because this usually takes 6 months to come out and it's all fleshed out beforehand, but they're doing this real time, so you need to protect yourself real time as well.
And then there was a question about employees who might have already scheduled time off. What are they able to ask about whether they're traveling or how they're spending that time off?
All right, I got to give a big caveat here. This is only during a national, international pandemic. Do not use any of my legal guidance that I'm about to give you after the national pandemic is done. Yes, you have the right to ask questions about where the employee has been. You cannot control where they are going, but you do have the ability to quarantine or force a quarantine on that person to the extent that that person goes to an affected area. Then again, the other interesting thing with this, and there is no guidance on this legally, but this is brand new, you have governors. I'll use our governor as the example. Don't go to Tennessee. That's what he said on Thursday. I laughed out loud when he did it. Maybe it was Friday. I literally laughed because I've been trying to tell people not to go to Tennessee for a long time, but that's just a UK thing. But if governors are precluding, you've got Connecticut, New Jersey, New York, travel quarantines, state checks, governors precluding, and you've got roadside stops happening because people have New York license plates. I drive rental cars when I fly around the country for different businesses, and 80% of my license plates came from Tennessee, the other came from New York. So I can't imagine how many cars they're pulling over that have nothing to do with New York. But they are stopping people with New York plates, and they are, if your flight came from New York, you're under a mandatory in Florida, mandatory 14-day quarantine or the length of your stay, whichever is the longest. And so times have changed. You have the ability to ask your employee before they get around other employees, where have you been? What potential dangers have you been exposed to? And you can do the temperature check of their forehead. You can't go into, and that's the other thing, we had a small twist on this that I need to let everybody aware of. If you're doing a test of people before they walk in, the temperature test is one of them. I told you last week, under normal circumstances, you cannot do that test. If we don't have a national pandemic and the CDC hasn't taken over, you cannot do a physical examination of your employees. In fact, you can't ask them a lot of symptomology questions, because here's the concern even right now that I'm dealing with a real client right now. We are doing temperature checks because the CDC says we can. What if you ask them questions about their symptoms and they divulge to you as the employer, I have diabetes, I have cancer, I have AIDS, and they reveal something to you that now as a manager you have that information. You now have information that they could later sue you, because when you laid them off, it wasn't because of coronavirus, it was because I told them I had AIDS, it was because I told them I had cancer, it was because they learned some kind of confidential information about me that was unrelated to the COVID-19. We very highly recommended that they use a third-party medical provider to do the screening for them, and that if they were screened and they had a potential positive, that it was not our people asking follow-up questions, because if it's your people have the information, and your people then could use that information hypothetically to retaliate. So there are some things that honestly, I'm afraid a lot of people are just following the CDC and they're not getting strong legal guidance on, look, yeah, you can ask the questions, make darn sure you don't ask the wrong one, because you might get an answer that later could bite you. You've got to be careful with the questions you ask if you're bringing people through a screening. We literally said, screen them. If it's hot, send them off to the side. Third-party questions are asked. That way it never gets put in their personnel. That's the other thing. I'm not going to get into a whole lot of detail, but I recommend all of my clients have two personnel folders. You have a regular personnel folder and you have a red folder. Red folder cannot be seen by management. Red folder is only HR. If you're too small for this, understand what I'm about to say. Anything goes in a red folder is medical oriented. It's only FMLA requests, it's doctor notes, it's things that a manager can't know. They have cancer, they have AIDS, they have something. Management can't know that when they're making decisions, so we keep two separate folders. In this instance where you're screening people, make darn sure that that person is not the same person involved with hiring, firing, promoting, and demoting, because now they have inside information that the employee can use against you. So if you can't use a third party, use your HR people and put it in a red folder that management never sees. Sorry, that's a little long-winded, but that's a critical issue that's developing right now, and I know of 0 attorneys giving that guidance about, yeah, you can give temperature, but don't ask the wrong question, or don't have your manager being the one doing it, have somebody else. So I wanted to throw that out there.
Oh,
Next, or do you want me to do the Kentucky really quick?
Let's do Kentucky.
All right, it won't take long. So, because a lot of this has been superseded by, whoops, I'm on the wrong screen. There we go. A lot of this has been superseded by federal. Why is my slide? There we go. Kentucky unemployment updates. March 16th. All waiting periods and work search requirements were suspended by operation of the governor. Starting that date, basically, you used to have to sit out for a time period before to make sure that you actually were unemployed and that you were looking for employment, so on. That's gone. Alphabetical process. You're going to see a screen here in a minute that came from the website so that you can see it, and we also have the website there for you to go. They're highly recommending, if you're going to lay off a bunch of people, please give them information about each one of the things on the website, show them the website, and so on. And the third one Individuals typically not covered are now, including self-employed, independent contractors, freelance workers, substitute teachers, child care workers employed by religious affiliated organizations and nonprofits. Some of those were not typically covered. A lot of this is now under the FFCRA, so it's a little bit duplicative, but Kentucky was ahead of the game because I think basically what they did was they took the FFCRA that was being considered and they went ahead and adopted it right then. So we did it like 2 days before it was signed into law. And then, as I said, they mirrored the FFCRA in declaring that employees not able to work for good cause because of the quarantine or to care for a family member are also eligible. Portions may be superseded by the portions of the FFCRA, and I'm not quite sure because I haven't run the calculations yet, but keep in mind that the CARES Act added on to the FFCRA the additional $600, so it'll be Kentucky unemployment plus $600. May be better for them to not be employed than to go through the 2/3 of their salary based upon the Emergency Family Medical Leave Act time period. So those are the basic provisions. This is the website. It's available at educationcabinet.ky.gov. If you go to that website, it has on there the specific clicking here to apply for the claim, and it has the dates here. It's alphabetical by last name. A through D's are on Sunday, E through H on Monday, I through L, M through P, Q through U, V through Z, and if you missed your day. So that is the basic information. A little hint for anybody who is laying people off, because I think that that's part of what we're talking about today in all candor. Make sure that you understand all of the federal protections in your layoff. WARN Act if you're laying off and fall under the 100 or more, the business location, the branch location, all those different things. And also keep in mind that you, even though this is an unprecedented time, and we won't get hurt by it, which don't follow that advice, you have to give COBRA, you have to give all of the notice information, your letter needs to comply with all of the things that you typically have to do, federal, state, and local, giving them guidance on what you're supposed to be doing. So that is basically the Kentucky unemployment questions and answers. It did not have a whole lot more because, quite frankly, I think Kentucky, and this is fine, I'm not disrespecting, we jumped out in front of it early. We've broken it down by last name, and now we're falling back on the FFCRA because it has more protections than Kentucky could have ever afforded. So basically, the federal government's now taken over with the 600 additional and so on. So that's it in a nutshell with regard to where we stand on the Kentucky.
So
any other questions across the board? I don't care what they're on. I may not answer them.
So one question for the unemployment section. And we had somebody just ask, if they reduced hours for a non-exempt employee, are they eligible to apply for unemployment? And then a follow-up to that would be, how should employers plan to respond to unemployment claims that they get related to reduction of hours?
So let me start with the second one first because it's the easiest. If you're laying off on a mass layoff, and all you're doing is laying people off and you get your employer response notification saying, hey, the person's saying they're eligible for benefits. First of all, don't pay an attorney to answer that because that's about the simplest answer. Yes, we laid them off. Why? Coronavirus, unable to continue paying. That's a simple response. I wouldn't ignore it. Unless you don't like the person. If you don't like the employee and you want to just make them have to wait the whole time for the response time to run, you could ignore it. If you wanted to respond by saying this person's a bad person, you could do that. It's not going to impact it. It may slow it down while somebody reads it, but honestly, if you want to be fair to your employees and you want to do this in an expedited fashion so that it just gets done, because they're going to get this regardless of how long it takes, it's going to be retroactive to the date of application. Go ahead and respond quickly with all correct. You can handwrite on those, and I think you scan or fax them back, depending on what you want to do. I think you should go ahead and respond quickly so that you just get them done. There's no harm to you. It's already done. Send it out, and that way the employee gets it done quicker, and maybe you have some goodwill among your employees. You're trying to assist them through the process. The state's asking that you try to assist. They've asked that you give them the link, because if they call the local, nobody's at the local. Nobody's at the local unemployment office, so you can't show up and knock on the door and say, I need to apply for benefits. They have to do it online. So if you give the information, you give the website, this one right here on the page, if you give that information to them, they can go on there, they start the process. I think you're going to get an automated link. When you get the automated link to your section, if you don't disagree with it, fill it out quickly. You don't have to. It'll eventually get done, but why make the system bogged down? I think if you agree with it, then it will probably get it out of the system, and they can deal with the ones that they need to deal with to get it done. Everybody's hurting right now, and I think we ought to try to assist the best we can.
Okay, let's see. So another one of these questions, what if an employee applied for benefits, and I'm not sure if it's referring to UI or the SPHR, but what if an employee applied for benefits prior to the passing of these new laws and were declined?
Well, first of all, if they declined, if the unemployment office declined, if you're still in the appeals process, there's a substantial likelihood that that'll be undone. I don't know whether everybody has dealt with unemployment before, but the case I always give is there's a case where somebody looked at somebody and said, I bet I can drive that bulldozer up that hill. And the guy said, and they're on their lunch break, and the guy said, I don't think you can get up the hill. You're going to tip it over. He says, I bet you I get it up there. So he goes up on his lunch break. He drives his bulldozer halfway up the hill, not the rest. It rolled backwards down the hill, did $100,000 damage. Employer fired him and the other guy for, or him, I guess, the other guy I don't know about, fired the guy who drove it up the hill. Unemployment came back and said, it's not like he violated a well-known policy. Yeah, it was stupid, but it's not intentionally done to harm the business. It was a mistake. So the reality is he's entitled to unemployment benefits. So if you're in the process, you have to continue with the appeal. Your appeal will probably be done by telephone. A lot of them are anyway. It may be extended because everybody's furloughed, including some of the state employees. If you've won on it and you're done, that person's done on your books. They're not entitled to unemployment. However, there's nothing in here that says that they can't go back in under the new Relief Act to receive unemployment. And so be careful of that. They might be able to get it. It probably won't be deducted off of yours, but it might just go off of the states because they're entitled to unemployment. Not, they were fired for cause, but now they're unemployed and they don't need a basis for it anymore. Allison, there was a first part to that I need to answer, but then I just also realized I skipped a hard question earlier. I answered one and said I would come back, and I don't think it's fair to skip that one either.
Oh, the reduction in hours if they were eligible?
Yeah, that's one. I may have skipped another one we may have to go back and get. Reduction in hours, there's a calculation on the website, I believe, on the Kentucky website, this one right here, or on the COVID-19.ky.gov that addresses where that calculation breaks. And there is a little bit of an additional information on the CARES Act, but there's a point in operation where you're no longer just reduced, that I think it's 25%. If you've reduced their hours by 25% and they're non-exempt, then they are now eligible for reduced pay unemployment where they can capture some of it. Don't quote me on it, but there is a calculation out there that you need to look at that identifies the number of hours that you've reduced it by, and that they're entitled then to look at unemployment for the difference between what you are paying, what they were making. And I think it's more than 25, but just check online. I think there's another one in there that I'm missing, and somebody out there screaming into their computer. And I apologize.
And make a comment. I'm happy to read it back out.
I don't remember.
Let's see. And then we have one, will public employers be eligible for payroll tax payments as indicated below? Under guidance that will be released next week, eligible employers who pay qualifying sick or child care leave will be able to retain an amount of the payroll taxes. So it has to do with public employers. Will they be eligible?
See, and that's in the new CARES, and it talks about certain public, but it didn't really identify which of the public. And I was looking to see, it is, I thought I had the answer, but I don't. And I apologize. I don't have that for the public. The way it described public was basically some of the public, but not all, and stay tuned, which really was kind of frustrating because it didn't really go into the detail I needed to be able to share with you all what that meant. And I also, I will apologize. I truly did not look at public employers because I was more interested in the private employer side. So for you all, I didn't realize that we would have true public employers on here. I do know under the FFCRA, public employers are not included because they have their own plan. Federal, state were a different animal and they were not covered, but that's where the CARES Act came in with some of the other jumbled mess that they threw together as to what an employer is. And I am looking in the few minutes we have left to see if I can find the definition of employer while we're doing this.
Okay. And then there's one more on the list.
Let's wrap it up after that.
Yeah. If you've already laid off non-essential employees, will any loans be forgiven related to people they are able to keep fully employed during the next 2 months?
Seems like a disjointed question because the ones who are already laid off, you don't have there. So that doesn't really apply, but those that you still have employed, yes. But the answer, I think I know what this might be going to. There's a numerator denominator part to the SBA loan. You can get reimbursed for those employees that are still there, but you will be dollar for dollar reduced or percentage-wise reduced for those employees that you let go that you didn't reemploy, but you have until June 30th, I believe, to reemploy those people that you laid off, and then you can use the calculation based upon the time period, the 8-week time period of the SBA loan. I think that's what that's referring to. Take a look at the documents we're going to send out afterwards from the U.S. Chamber of Commerce, from the Senate Committee on Entrepreneurship and Small Businesses, and on the slideshow. There is the ability to still get it, but the less people you bring back that you've laid off, the more you will not be reimbursed. You'll have to pay that back at the 4% rate because they take the number you have, the number you used to have, and that's the percentage. So if you only have 3/4 left, you're only going to be able to write off 3/4 of your amounts over that the 2 month or the 8-week time period. I think that's what that question was pertaining to. If not, everybody on here, feel free to send us an email afterwards of questions you feel like we didn't answer. We did this last time. It'll take a little while because you wouldn't believe the number of people that come asking questions and how many things are going on. But we will get to those and we'll send them out sometime this week, if possible.
Thank you. Allison, did you get to that 1236 question?
Yes, that's one of the recent ones we just asked.
All right, wasn't sure. Hey, thank you all for joining us. We really appreciate your spending time with us today. I'm delighted Andy could make the call, and Jim, if we
Yes,
could give
sir.
you an applause, we'd all do it. Thank you very much for what you've done. Gotten a lot of good feedback during the call. We wish everybody a safe and happy week. Take care of yourself, take care of your family and your friends and your employees. And I hope you'll sign on at 5 o'clock and see Bashir. I think he's doing a nice job. My friends are doing beers with Bashir separately. Anyway, everybody have a great day. Thanks again for pulling this together. Autumn, Allison, Jim, Chase in the background. Thanks so much for joining us. You all have a wonderful day. Take care.
Thank you all.